All right, happy Friday, everybody. Happy Veterans Day, too. Welcome back to What the FICC. What the FICC, man? I am Spencer Israel. This other guy is Ian Cully. He is the head of fixed income, currencies, and commodities at All Star Charts. Mr. Ian Cully, how are we doing today?
Oh, beautiful. Nice sunny Miami this morning. Beautiful
Excellent.
day down here. Enjoying it.
Excellent. All right. You and I were talking about yesterday. We were like, what should we talk about today? And I figured we got to talk about crude. We've been talking about crude, of course, but it just appears to be following the technicals so closely. Let's bring up the crude oil chart if we can. And yeah, what's going on here, Ian? Because we're having a little bit of a rough go of it for the last, what would you say? I guess couple months now since those highs back in, what was that, September?
Mhm.
Um we're bouncing here today. Tell us what you're seeing in crude because it looks like it's playing to the technicals to a T.
Yes, first chart up, zoomed out chart going back more than a decade and highlighting that 115 level, which we've talked about, with this show for former highs of 2011, 2012, and 2013. Found resistance up there at early 2022. And it's pulled all the way back down to another critical area, an area of former resistance turned support around 62.50. And we got a really nice rally earlier this year. Everyone was talking about energy again. I myself was all bulled up on energy. But like you said, the past 6 weeks or so, it has not been looking too bright for crude oil or the rest of the energy space. Interestingly, crude has come back, retested the 75, 74 level. It's with the recent high, or I'd say recent high, but the prior cycle high from 2018. And we look at those former 2018 highs uh, when we're analyzing equities. That was when risk assets peaked back in 2018. So it's interesting to see crude oil pulling back and finding support at that level. But as we zoom in even closer, this 75, this is a 76 level. Actually, this is the retracement level from the consolidation here. But what's really interesting is that 74, 75 level, 76 level. Remember, when we draw our boundaries in technical analysis, we like to use crayons, right? They're areas, they're zones. That area where it's finding support today acted as resistance for most of the spring into the summer earlier this year. That 74 level is the level we wanted to trade against earlier this year. We talked about it a lot, Spencer. We were waiting for it to get
We
above
did.
74. It did. It ripped. It pulled back a little bit into late August, and then again we got that big rally all the way up to 95, which lo and behold coincides with a key extension level when we extend from the year-to-date base. So it's amazing to see. I wouldn't say it's amazing. Um, it's nice to see price respecting these levels. I wouldn't say it's amazing because we see it all the time. It's very, I guess it's
It makes you feel good. It makes you feel good.
well, it's constructive. It's constructive for, I think, energy. I think it's constructive for crude oil. Um, Maybe it does make me feel good, but in reality, I really don't care if crude goes back down to negative 50 or if it goes to 250. And it's the right attitude to have. I have been bulled up energy. I still like energy. Uh, JC's talked a lot about maybe we get a rotation into more of the growth areas of the stock market, heading into the end of the year. And it maybe makes sense to see, energy stocks and just energy more broadly, including crude oil, heating oil, gasoline, start to pick back up in the spring, heading into the summer months, strong seasonal period for energy. Um, that seems likely. Again, noticing crude oil respecting these levels and finding support in a former area of resistance is constructive for the bull's case.
So basically, where we are at now is the key level, and
Yes,
below.
absolutely.
I guess if you're bullish, you don't want to see it fall below where we're at, and we're actually, as I say, this crude is trading up about 2% today, so we're at $77 a barrel. But yeah, you don't want to see it fall below the 75, right? As a bull, as a bear, you don't want to see it stay above 75.
Yeah, and if it is, or if it does drop back below that 75 level, I think we can look to 71.55, 72. We can round it down to 70 as another area of potential support. And then again, it's at I extended from 64, 64.30 there. You see at the lower bounds, and I extended from that level because I wanted to get the wave from that high in November down to March. Now I view that the May low kind of as an out of line movement, and it wasn't really part of that wave from peak to trough there. However, I think that 62.50 level that we highlighted here in the beginning is key potential support below 62.50. And I think there's serious issues in the energy space, and we definitely do not want to be invested in energy if that is the case.
What
It's interesting.
about the other ways to look at this, or crude versus the rest of the energy complex, or other parts of the energy market, be it stocks or ETFs or whatever? Are they also holding up at what appears to be a pretty important level?
Yeah, it's we're seeing areas of the energy space definitely hold up. XLE, the different industry group ETFs are holding up, and I think that's the best way to describe it. They're certainly not absorbing overhead supply and ripping higher. What's interesting is that crude oil is definitely rolling over relative to the CRB index. So it's rolling over relative to the rest of the commodity space, and we're losing that. It's crude and energy are losing that leadership role that it has been playing since the summer. It's interesting to see this take place, and it's interesting because copper has dug in recently. Copper mining stocks have started to dig in, and that's really been one of the questions that we've raised over the past 6 months or so. When are base and industrial metals going to start to participate along with the other major pro-cyclical commodity group, which is energy? Maybe we're going to start to see some rotation between those two pro-cyclical areas. I think that would be extremely bullish for the overall commodity complex and the commodity super cycle that I do believe we are in. But when we look at energy stocks, still range bound. Now, I'm not crazy about diagonal boundaries. I'm not crazy about trend lines, but the market doesn't care. The market doesn't care, and this is an obvious trend line that price has been respecting. When I look,
Oh, Ian, did I lose you?
at the XLE
Okay,
chart,
all right.
did you lose me?
No, I lost you, but I got you back, so we're okay.
It says my internet connection is unstable. All right, I see an ascending triangle here for XLE. And that has a bullish bias. As long as price continues to dig in at this again ascending or rising trend line, and I have to give energy the benefit of the doubt. I have to. I hate to say assume. I don't want to assume, but I think energy an upside resolution is in the cards. And then looking at the individual industry groups, you have oil services that has definitely led the charge here, and then explorers, producers in the middle pane, and then oil refiners in the lower pane, all holding above these year-long trend lines. it's interesting, it's interesting to see that they remain buoyant at the same time, near term, again, over the past month to 2 months, they don't look the best. And, why should they? Energy just hasn't looked that great, period. Crude oil, like you mentioned, has had a heck, what 90, we went from 93 or 95 down to 74. I mean, that's a heck of a move, even for a volatile asset like crude oil. And then when you look at the big names, look at names like Chevron. I mean, went up, tagged our first target, that extension level. That's already heading all the way back towards those 2018 highs. Hasn't retested those 2018 highs yet. But again, when I just look at the last 2 years, 2.5 years of price action in Chevron, it looks more like a potential top than it does a basing formation, a potential continuation pattern higher. But the vert is still out. The trend is sideways right now for Chevron, and above 184. And you know how these things move. We can be all the way up towards 670 pretty quickly. Pretty quickly.
All right, not bad. Not a bad setup here. Do we have any more, or was that it?
Yeah, I mentioned copper. We talked about copper base metals a little bit. These are two charts that are definitely on my radar. We talked about them last week. Did we talk about FCX earlier this week? I feel like we might have.
I think we talked about FCX last week. I don't think we talked about it on Wednesday. No.
Yeah, I've been talking a lot about Freeport and that 33 level, 33 and a quarter. Freeport needs to dig in down here, right? This is the copper mining bellwether, and if copper is going to dig in and catch higher, which is it's trying to dig in now, I'd imagine Freeport would be doing the same. So I'm watching that 33 and a quarter level in FCX, and it's all about support right now for these assets. I mean, I didn't even draw any red arrows on these charts just because it's not really important. We're not really talking about overhead supply or potential resistance. It's all about support. So want to see these assets dig in and catch higher. And we look at another mining stock that I really do like, this Southern Copper SCCO. This is a $65 billion copper miner. Looks a lot better than FCX. And actually putting in a higher low, potential higher low. We need to get a higher high to really to validate this higher low, and that would be a breakout above 83.50. I think we're above 83.50. We can be long SCCO, targeting 110. We get $100 roll here in this Southern Copper, which I like, and it's in a bullish regime. It's in a bullish regime. You know how I feel about my momentum regimes, Spencer. And I like buying stocks that are trending higher and strong bullish momentum regimes, and that's what we got here.
I was just a little bit distracted because I was just looking at the market here, and I didn't really acknowledge the fact that it's not just a green day for energy. It's really a green day for just about everything. I mean, there's pockets of weakness out there, as there always is, but I mean, looks like every sector is in the green today. So just a positive end seemingly to the week.
So interesting. Yes, action. So I was traveling yesterday. Flew Spirit Airlines for the now you laugh. I was a little nervous, right? It was the boys' first time flying. But the plane was nice. It was a brand new plane. It was a short flight. We had some delays, and then we flew in Fort Lauderdale. It took a long time to get our car and finally get down to Miami and find our Airbnb. So I'm in the back seat looking at my phone at 3 o'clock in the afternoon, and I couldn't believe the action that I was seeing. It's like big reversal. They're trying to figure out what was going on. I guess Powell.
It was they blamed it on Jerome Powell. But you know they always blame someone or something. So
He's an easy target, right?
yeah,
I'm
yeah,
gonna start blaming everything on Jerome Powell soon.
yeah, yeah. That's what you can do.
Uh, another thing, I wanted to bring this chart along. You've been pinging me about this market recently. It's Palladium.
Well, 5-year lows.
I know, but it's been making new lows. I just got to change the number next to fresh lows. It's
Yeah.
4-year lows. Not too long ago. I mean, look at this chart. It's just ever since it peaked in 2022, along with a lot of inflationary assets when war broke out, like wheat and oil. It's just been trending lower, straight lower. Uh,
Yeah.
I didn't bring a chart along today. Maybe we can hit on this point on another show. What's interesting is that commercials continue to pile in and buy these lows in Palladium. The net, historic record long positioning has been the norm for almost a year now. So, when we get, that's just, evidence of, an extreme imposition isn't necessarily a signal. It's a heads up that conditions are there for an unwind, for a big reversal. As you can see, it's not yet. we gotta wait until we
No.
see some sign in price, and then we can get behind that. So until then, Palladium is definitely off limits from the long side, and it's not the type of action we would expect to see if base and industrial metals are going to dig in and rally in terms of a broad-based rally for those assets. So keeping an eye on Palladium, looking for some more constructive action from this Notre Dame of the precious metal space before we get excited about copper.
Wait, what did you say? The Notre Dame?
Yeah, we joke around. We call it the Notre Dame of the precious metals. It's not really part of the precious metals conference. It's in its own.
Oh, it's independent. I
It's
see.
independent.
I
Yeah,
see.
I mean it's a
I see.
base metal.
Okay.
But it's
Okay.
it's an industrial metal. It's a precious metal. Now my wife, who Finch jeweler, goldsmith, I asked her at the dinner table, "Hey, is palladium a precious metal?" Yes, absolutely. Like no hesitation. But it just doesn't act like one. I mean, look at gold. Gold has every reason in the world to roll over, and it's close to new all-time highs. So
Yeah. Well, today I learned. All right, Ian, I know you are on a pseudo vacation, so we'll let you go a little early today. We did have some good ideas discussed in crude, some levels in Chevron, in Freeport McMoran, in Southern Copper. And yeah, if you guys want more of Ian's stuff, the only way to get it is by either reading his blog, the link to which is down below, following him on Twitter, or if you really want his good stuff, you subscribe to All Star Charts Premium. The link to do so is down below in the description of this video. As always, any questions, comments, concerns, email us. We'll throw the email up on the screen at the end. And that's all I got. So, Mr. Cully, have a great weekend. Enjoy your time down in Miami, and we'll see you next week.
you too. Thank you, Spencer. Thanks for watching,
All right.
everybody.